Hey, good morning, guys. Danny here. So this is like my favorite dashboard for to analyze basically decentralized finance, especially all of the crypto networks in the context of DeFi, decentralized finance, right? So we just heard about the crypto crash recently. Uh, Many people still doesn't understand the difference between centralized and decentralized, right? So the one that's crashing, but a few months or like weeks or FTX is like Coinbase is centralized exchanges, meaning when you deposit your money there, like if in the case of Coinbase, Brian Armstrong will basically kind of responsible to custody your asset, your money, kind of speak, right? And because Coinbase is in the US, therefore it's like they have to follow like US regulation, right? The same thing as FTX, but FTX International is not based in the US, it's based in the Bahamas, so it doesn't comply with the kind of US law. So, but still, it's when you deposit your money on FTX International. I'm not talking about FTX US. If the FTX International, the fund, the assets that you deposit on their FTX account is supposed to be under the responsibility of Sam Bankman-Fried, which is the CEO of FTX, right? So that's centralized. So which also means that you are putting the trust on one person, basically, which is the CEO or the company, so to speak, right? The same thing if you like buy stuff from Amazon, you're putting trust on Amazon to fulfill your products, right? So that means it's centralized. Basically, whatever product or service you're getting, basically is like intermediated. Like there's like a middle person that are basically whom you trust that you're getting the product from, right? Now, decentralized is kind of like basically getting rid of that middle person, right? So if you back on the old days, right? How do I exchange values, right? So you heard about the word barter, right? So in the old days, and when I'm a farmer, I have like one goat and then I one chicken. I go to that chicken farmer and then I said, hey, do you want to swap like one chicken to one goat? And then I said, okay, probably the chicken doesn't uh, agree. Oh, how about like one chicken, two goats, whatever, right? So when we agree and then we exchange, right? So that's like without intermediaries, right? But uh, the one with intermediaries is like when you go to the kind of probably like a distributor or to a marketplace where you kind of instead of selling your goat into directly to the farmer who wants your goat, you go to a distributor or wholesaler or like a marketplace intermediary who basically buy your goat. I'm gonna buy your goat, and then it's easier for you. You don't have to find the chicken farmer, right? And then the chicken farmer just go into that intermediaries. So that's kind of like the difference, right? So our world is like the evolution of, if you look at the history, it's always like going back and forth between centralized and no intermediaries or decentralized. So going back to crypto, basically the one that's been like blowing up, so to speak, with the exception of Luna. Luna is a decentralized a stable coin, but that's another special case that worth for like 1 or 2 hours discussion. In the case of Celsius, FTX exchange, BlockFi recently, 3AC, the hedge fund, they're all basically centralized like entities that basically responsible or like a custody your assets or like an intermediary, right? Um, so what is this DeFi? This DeFi is a decentralized finance. Basically, it's the opposite of that. So if you look at all of this, this is like a nice dashboard, right? If you put your money onto these like applications, you're basically not relying to a person or not relying to a company, but you're relying a code, a software, basically to custody your asset. This is kind of mind blowing concept. Some people who doesn't understand what like a software can like custody your asset, can like hold your money. Yes, because money is basically zeros and one. It's basically it's a code. Money itself is a code in a crypto world. There's not. That's it. It's just zeros one. Your Bitcoin is represented in zeros and one. Your Ethereum is represented in zeros and one. So the one who's holding that zeros and one is also another zeros and ones. It's not a person. Okay, that's probably the simplest way to put at it. Which is basically like makes sense, right? Let the zeros and one also hold your zeros and ones, right? Instead of person, because person sometimes you can trust, like today you can trust that person. You'll never know, like after 1 year the person can like change their mind and then can run away with your money, and then that's it, poof, right? So with this it's more like neutral, right? A person, a judge can like, depending on like the mood of the judge, can like make a good decision. As a human being is like very like how to say, based on our mood, right? If we're angry and we make a bad decision, if we're calm then we make a good decision. So that's basically it is, right? So code, a software or zeros and one doesn't have emotion, so it's like neutral. So when it makes execute a decision, it's just executed. There's no bias, there's no like human emotion involved. So I hope like you understand that. That's really important. That's basically crypto is. You're taking out the human emotion, the human element out of the loop, right? So you're basically trusting on the machines, on the software, on the code to run. Like, uh, so this is like DeFi Llama. So you can go here and you can like get an overall view about the application. Sorry, the layer one. We call it layer one, or the crypto networks that are kind of like dominating, right? So if you look at this one, Ethereum is like 58%, right? 58%. Binance Smart Chain, the token is BNB, right? It's from the Binance exchange, but this is different. This is the decentralized version. And Tron, Polygon, Arbitrum, Optimism, Solana, Kronos, and so on, right? So if you look at Ethereum right now, as of now, it's like the king of the crypto networks in terms of DeFi, right? I'm talking about specifically in the DeFi context. What does it mean? Like 58%. It just means that if you look at here, the total value locked is like 24 billion. So this is what it means. So as of now, there are about 24 billion worth of money is being locked under Ethereum. So there you go, right? While BSC is about 5 billion, Tron is about 4, Arbitrum is 1, Arbitrum is about 1 billion, right? And so on, right? So which also you could also kind of say that the more money being locked, again being custody by the software, probably right now, then people can trust that software, right? Otherwise, people wouldn't put billions of dollars into the software. So for right now, the number one is Ethereum, because people are locking up their money, 24 billion all around the world, right? In Binance Smart Chain, people locking up about $5 billion, right, into the code. I'm talking about without custody, right? This is different from the Binance exchange, right? The one that's led by CZ, right? CZ Bank, whatever his name is, right? This is the decentralized version of the Binance network. So that's how you look at it, like the number, the amount of money that people are willing to trust that network, right? What does it mean? Like, I don't know, you kind of like interpret it. Like, for me, this is like a good signal, because if people doesn't trust this network, then people wouldn't put their money into this network, right? Because it's like a mind shift, right? Before it used to be you just put your money into the bank, but bank again is centralized, right? It's not decentralized. You have to trust Chase. You have to trust, let's say, JP Morgan. You have to trust the CEO of JP Morgan, right? This is literally like you're putting your money, your Bitcoin, Ethereum, your crypto, your zeros and one under the custody of another software, right? There's no like kind of person who are responsible to custody your asset. It's kind of like um, kind of like zeros to one invention. It's like you have to like brave it, right? It's like kind of like reminds me of back in the days when 20 years ago when Amazon just out in the market. People are afraid to put their credit card to buy something, right? They said like, oh wow, I'm putting my credit card on the Amazon and to buy this like phone or to buy a shirt. What the hell, man? Somebody's gonna like steal my credit card number and then just gonna shop for me, whatever, right? Now this is the same thing happening now in crypto. Oh, I'm gonna put my money into this software. The software was gonna custody my money instead of like Chase, who I can like look at the person and like point, oh, this guy is responsible. It's kind of mind-boggling. It's for many people it's still like doesn't understand this, the significance of this, right? You're putting money into the software, you're asking the software, you're putting trust into the code, into the software, into the machines, into zeros and one. There's no kind of like man behind it that can censor you, that can block you, whatever. This is basically just like Amazon 20 years ago. You're the first experience, you're buying stuff online. Now this is kind of the first time after I don't know hundreds of years that we're putting money in the custody of software. So just take that in mind, right? There's no custody of a human being behind this. So so if you look at here again, so that's talking about the amount of money being locked, right? So Ethereum is like more than about 60% market share, right? This is why I hold Ethereum, right? I hold also like BNB, I hold Polygon. I'm not holding Tron. I'm still like debating about it. Arbitrum doesn't have a token yet. I hold Avalanche, Optimism a little bit, Phantom no, Kronos no, Solana yes, because Solana has just been experiencing like a crash because of the FTX debacle. It used to be Solana used to be like number like 4, you know, about like 1.2 billion, something like that, right? Above Polygon, like below Tron. But when the FTX crash like action happened, because FTX basically one of the proponents of Solana. So when the FTX crash, it also brings down kind of Solana, because FTX is I think one of the like one of the investor of Solana. So I think some of the assets of Solana assets kind of stuck inside FTX. And the other way to look at it is like the number of protocols. You can look exchange protocols like number of applications, right? So if you look at Ethereum, there's 600 applications. Binance has 500, Tron has 11, Polygon 342, Arbitrum 143, Avalanche 274, and so on, right? So application is the app. The people application is people, hopefully million of people or billions of people is going to use, right? So the more applications that are being generated or being developed under that what do you call that? Under that crypto networks, under Ethereum, for example, at 600, then the probability of people are using it is kind of higher, right? So it's like, what's the app I'm using right now? Facebook, I use WhatsApp, I use like Google, right? And Amazon, and when people use that apps, that the more people using that applications, the more valuable that application is, right? Right. So if there are more applications being generated or being developed, then it's like common sense to the probability for that crypto network is going to be successful. Because if one or two applications, like let's say around 607 Ethereum, right, applications, right? If you look at drill down below, this is like the applications under Ethereum. There's MakerDAO, Lido, Curve, and so on, right? And many of you like ask, what the hell is this application? It's just you try it out. So like Uniswap is basically in applications like Coinbase is to exchange. So if you click this Uniswap, right, there's about 3.4 billion like crypto, amount of money being logged if you go to the website, right? So this is the Uniswap website, and then you launch an app, right? This is basically just like Coinbase. So you connect your wallet, right? There's three ways to connect. You can use MetaMask, right? You can use Coinbase wallet, right? And then once you connect your wallet, then you can buy and sell basically, just like Coinbase, right? So if you have like USDC, and then you can like buy Ethereum, you can exchange, you can buy like I don't know, 1 inch token, you can buy Aave, and you can buy wrap Bitcoin, yeah. So it's basically just like Coinbase, but this is the decentralized version of a Coinbase, which means when you kind of like uh, there's no custody again, there's no single company who's responsible, which also means when you screw up something, for example, when you make mistake, then you cannot go back, because everything is like already being executed by a code, and it's kind of like final. After you exchange, for example, 1,000 USDC to, wrap Bitcoin, right? So you got 0, 0, and then you connect your wallet, and then you click, boom, swap, and that's it. You cannot say to Uniswap, hey, you call to Uniswap, can you revert my transaction? No, you cannot do that. Probably in Coinbase you can still do that, right? I don't know. But in Uniswap, it's more like final. Whatever transaction you execute is kind of final. If you made mistake, that's it. That's why you have to be careful when you can execute any transaction on the decentralized version of the applications, because there is no kind of like you cannot revert back whatever transaction you already executed. It's kind of final. The only way you can do is like you revert back, or you swap back, your 0.59 Bitcoin, you swap back to USDC, but then you're incurring kind of losses, right? You're incurring because every time you swap, there's like a fee that you have to pay. Just like when you swap in Coinbase, I think Coinbase charges you like 1% or 0.1% or 0.5%, something like that, right? There's a fee. So, okay, so going back to, the applications, right? So these are the applications under Ethereum, right? There's so many of them, right? So when I look at this, I interpret this as like the more number of applications, it means like a good sign. But it's not like a 100% guaranteed. If you have like a lot of the most number of protocols is going to be like the one that's dominating the market share. You can see it from here, right? Let's say, for example, here in Polygon it has 342, but the market share is like lower, right? So Polygon is only like $1 billion, for example, yeah? Right? Same thing is here, Tron is only like 11, right? But it's above, like the value lock is 4 billion, above like Polygon. So it's not necessarily the case. It's like the number of protocols is higher, therefore like the amount of money being locked is also higher. But nevertheless, it's like a good sign, because it kind of increases the probability, because it also depends on the applications. If it's like a high quality applications, and the most important thing is the applications that the people use, right? And then the easiest way to find out what are the applications that people use in Silicon Valley, they use this product market fit. Basically, the number of users is like by weekly or by monthly is like exponential, right? So it's like week 1, the number of people is probably 100, week 2 is like 1,000, right? And then week 3 becomes like 10,000, and then week 4 becomes like 100,000. So when you see an applications that are being used at an exponential rate, then probably you want to bet on that applications, and probably you also want to bet where that application is being built on top of. Is it being built on top of Ethereum? Is it being built on top of Binance Smart Chain? Is it being built on top of Polygon, Solana, Arbitrum, Optimism, and so on, right? So at least that's the way I look at it. um, because at the end of the day, the applications has to be used by people, real people in the real world, right? So it can give like real value, just like I use Amazon because it has value to use Amazon. I use Google because I found it valuable to use Google application. I use WhatsApp, right? So that's the one that brings value to the world, meaning like many people are using it. Then probably I'm gonna bet on that applications because that application is probably gonna generate a lot of money, a lot of value to the world, right? Okay, so yeah, so that's just rambling about how do I see, like how do I put my money, how do I like bet on a particular token. That's how I see things. It's not like 100% foolproof, but I think in general, I think it's kind of like it's good to have that kind of a framework, like so you're not blindly like you know putting your money into like oh, this token or this token because again, okay, so these crypto networks, right? This crypto whatever Ethereum, Binance, these are all startup, and the data in startup is like 99% or like 98, some crazy amount of like percentage are gonna fail. Not to mention some of these like applications, like the one built on top of Ethereum could be in on top of Binance Smart Chain, could be on Polygon, Solana. There are scams. There are literally scams. So you want to take that into consideration, right? Because basically this is like an open source software, so people who can uh, have laptop, who has a Wi-Fi, who knows how to code, they can make an application. They don't need permission. So many people who has a probably bad intention, who want to scam, they can make an application that for to scam people, right? And then they can make a token like oh like instead of like I don't know Polygon is Polyme, they make an application under let's say Polygon, and then they create Polyme token, but it's actually a scam token. They're just getting the money and then they just like run away, kind of run away with it. So take that in mind, and then not to mention even the people, the software developers who have good intention, who doesn't want to scam people, who really trying to build a value to the world, still are not successful because they cannot get this product market fit, or many people are not using the applications, right? Therefore, they're gonna fail over time, not probably after 1 year, 2 years, 3 years, whatever. Um, right now I think there's about like 10,000 or even 20,000 like tokens, right? So that's mind-boggling, right? To which token to pick. Um, so and probably 99% is going to fail. Only 1% is going to be successful, but that 1% is going to be so big when it becomes successful. At least that's what I believe in, because crypto is like it's like the future of money. There's no way like you can go back to the old money. The old money is not it's not natively digital. It's not natively open. It's not efficient. And there's so many drawbacks. It's not fast. It's not effective. It's not efficient, right? Just give you one example. If I want to send money, for example, from the U.S., I have relative in Indonesia. I send like $1,000. Yeah, I send them like with stable coin. It reaches like within like I don't know, 10 seconds with Solana. I then send like 1,000 USDC on Solana network. 10 seconds or 5 seconds. But if I use, for example, bank to bank, let's say I used to have like a HSBC, it takes like, I don't know, 2, 3, 5 business days to settle, right? So that's like from 3 days to 10 seconds, that's like no brainer. I mean, the amount of efficiency, the amount of like how fast it is just like day and night. Not to mention there are other benefits of crypto. Yeah, so yeah, I think again, this what I like about DeFi Lama. It gives me like a really nice overview about what's happening, and you can like more like make a informed decision, like smart decision, right? So I'm not trying to best like Cardano, but I know many people like Cardano. Let's see where's Cardano is. Uh, yeah, this Cardano is like number 29 with 14 applications and then about 58 million money locked under Cardano token. And you click Cardano, these are the applications that are using Cardano right now. You know. What else am I going to say? Oh yeah, yeah. I know this is so in investing in crypto. I think part of it is like religion. You know, at certain crypto networks, probably like I don't know, there are more like religion aspect towards it rather than fundamental. You know, or based on like data, which is fine, right? Because money is basically just like if you believe in something, there's value on that thing, right? That's why, like US dollar, basically, we believe in US dollar, but US dollar doesn't is not backed by anything. It used to be backed by gold, but no more since I think 19 the Bretton Woods agreement, whatever. US dollar is not backed by anything, right? So it's just like printing money out of thin air. So it's fine, but it's still backed by the US government, whatever. Like it has to force you like go to prison, you know, all those kind of stuff. Um, so I understand crypto also is part of it is like a religion thing. Some crypto has more religious aspect than the rest, but for me, I like to put more based on like data and the actual like utility of that like crypto to the world, or the actual utility of the applications that are being built to the world, right? I think that's more important, and that's more like I think more like uh, a useful framework to analyze like which crypto token you want to put your money into, right? I'm not bashing again at Cardano. It's fine. Some people love Cardano. It's fine. Um, but I like to look at the data, of course. Um, yes. So this is it. I think it's been I don't know 30 minutes. I think I'm gonna end this. Um, yeah. Let me know. I'm also still learning. Crypto world is like mind-boggling for me. Um, but the one personally I like right now at this moment, the one that I think has like good traction. Oh yeah, the other things that's the one that I want to I think it's pretty important is to look at the developers because the developer is the one do building the applications. So Microsoft, from Steve Ballmer, the CEO of Microsoft, it used to be a famous like words he used like developers, 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 because the developers is the one who write code and who makes the application that people are going to use. So the more developers that are developing using under that network, under Ethereum or under Solana, then that could be a good sign, right? That could be a good sign. Um, so that's the one I look at too. So there's one app, the one I like, the one I look. So this one is sentiment. It shows you like the developer activities in 30 days. Surprisingly, Cardano is like number one according to this app. 540. Bukagata Kusama Cosmos, right? It's weird, but I don't see this is because I don't see a lot of applications under Cardano, so I don't know. There must be something going on there. This one also like to analyze like um, so it's just showing you daily active addresses, right? So right now, uh, BSC is like number one, Binance Smart Chain. The token is BNB. If you wanna, this again, okay. So this is not financial advice. I'm just showing this for educational purposes. I'm not trying to sell you any coin, okay? I'm just sharing what I know. If you don't like it, it's fine. Give it thumbs down. It's fine. If you like it, please give thumbs up so other people can find me. Um, so yeah, so this is just showing daily active addresses. Um, so here is showing like the latest one, like yeah, as of November, December, right? So BSC is like 1.5, Solana is about half a million, Ethereum is like 385, and then Polygon 360, Cardano 66, pretty big, Cardano, right? Arbitrum, and then Near, and then Avalanche, and then Cosmos Hub. So, so those are probably the top, what, 10 of, in terms of daily active addresses. So I think that's the address that people are using daily. Uh, the number of unique wallet address sending on-chain transaction in rolling 24-hour period. Yeah, okay. And then in terms of daily transaction, so Solana is like the highest, right? Transaction is like, it's like, so every time I think you, let's say you swap, for example, from you buy something, $1,000 to Solana, that's like one transaction. You buy NFT, you mint, it's like one transaction. So Solana, I think, is very popular. It's like very high because I think it has their NFTs market is really, really kind of like active. So Solana, according to this, is like have like what, 5 times or even 6 times than Binance Smart Chain, right? The number of transactions. Um, yeah, Polygon is like number 3, 3.1, Avalanche, and then Ethereum 1 million, Arbitrum here. If you look at Cardano, it's only 64,000, right? With Solana, it's like night and day. This is why I like about Solana, because it's like, I would say Solana is like one of the cheapest. So in order for you to make a transaction, in Ethereum, it costs like to send, for example, to send or to swap, for example, to swap like 1,000 US stablecoin to, let's say, to one ETH or one BTC. In Ethereum, I don't know, it takes $6, something like that, or $5, right? But in Solana, it takes like then it's about like 1 cent, like probably like, yeah, just 1 cent. So it's really cheap. So that's why if you look at the number of transactions, it makes sense that why people are using Solana more, because it's cheap to make transaction. If you want to buy NFT, it's cheap. It's like 1 cent. Like if you go to Coinbase, if you want to, for example, to exchange, let's say, to buy, let's say, I don't know, 1 Bitcoin or 1 Ethereum or 1 Solana, Coinbase will charge you 1%, right? That's, I don't know, depending on the how much you, right? So if it's $1,000, Coinbase take like 1% of that. It's like, I don't know, like 1,000 is like $10. Yeah, $10. Yeah, so that's quite a lot, right? Or even like 0.5% is like $5. But in Solana, it's like if you do this, like probably 1 cent or 10 cents. They're really cheap. So this is why I think the number of transactions is like really, really high. Binance Smart Chain is also pretty cheap, but it's not as cheap as Solana. Polygon though is, I think, is also really cheap too. So it's as cheap as Solana, but they don't have a thriving, I think, NFT marketplace. Therefore, like I think the number of transactions is not as high as Solana. It could change in the near future. I don't know. I haven't used any Cardano applications, so I do not know how cheap they are. But I guess it's not as cheap. My assumption is not as cheap as Solana, or it's not as cheap as Matic or Polygon, right? So that's actually, for me, I like that thing, that the cheapest, the better it is from my point of view, because it makes people want to try something, right? Because for them it's like, okay, I will buy in Solana, or I will like buy NFT in Solana because it's like cheap. It's only like, I pay only 1 cent instead of I'm buying it from Ethereum. Oh, it cost me like $10 just to buy this NFT. Never mind. You know, they don't even want to try it, right? Um, okay, so this is again the same as that total value lock. Yeah, it's the same data as uh, um, the Diva Llama over here, the total value lock, right, over here, right, or this one too, showing total value lock in terms of percentage. Um, where am I? Yeah. So, this is interesting. New to the Twitter follower, like the buzz is showing. Actually, Solana is one of the highest. I guess because of the recent like crash. I think many people want to know what's going on in Solana on Twitter because that's where I got my news like on Twitter about crypto networks. Wow, Binance Margin really taking off here in terms of Twitter followers. Wow. So it's the beginning of like this year January. It's like it's like 10x from like 1 million. Now it's about like 10 million. Wow. Binance Margin. Yeah. Um, yeah. This is showing the price. So this is showing Ethereum percent of Ethereum market cap. So Binance Margin is like 34%, whatever. Um, yeah, this side is also interesting. It's good to analyze if you want to know who is winning, kind of in terms of the number of money being locked into that uh, crypto networks, the number of applications being developed, or even the number of like the daily transactions, what have you, the number of active daily address, and so on, right? Yeah. All right. I think this is good for now. I'll see you next time. Peace.